All right, let's talk about a couple things here, right? Um, yeah, you never know for sure what's behind market moves and shit like that, right? We always find out after the fact. The market is a forecasting mechanism, blah blah blah. But I think what's really been playing into this recent selling, and you could make a legitimate argument for it anyway, is the China lockdown situation. And the reason I say that is because with everything going on with the Fed, right, looking to slow things down, looking to tighten financial conditions, and already the economy, showing some signs of slowing growth. I think this China lockdown thrown on top of everything accelerates what players were nervous about. Okay, and that was what Cal was just talking about. The Fed looking to tighten and raise into a potential slowdown and overdoing it, right? Until something breaks. And now, because of the lockdown, it accelerates the process, right? From backed up imports, exports, you name it. Things happen so quick. I think the market really has reacted to that. And that's why you're seeing a lot of the stuff that's even held up well, okay, they found an excuse to hit them, okay? And for example, the thesis out there that we were seeing play out in the price action was tech. It's going to have a tough time, right? But a lot of those commodity names, a lot of those names that were showing amazing strength would benefit because you would have inflation, even though it would come down off the highs, sustained at a high point, right? And a lot of these commodity names that have been out of favor for so long, it's their time, okay? The cycles of the market. But the concern, again, this is a concern. The concern now is that if the slowdown accelerates globally, okay, this is on top of what's going on. I didn't even mention, right, the Ukraine situation and how that affects all of Europe and everything else, okay? But now with the this China ingredient and a slowdown potentially accelerating, okay, everything gets it, okay? Everything gets it, because eventually that's going to weigh on inflation, right? It's a deflationary force. And I think that's what's changed this week, starting from last week, late last week, into this week, in just a matter of days. Okay. Yeah, we don't really know how it's going to play out, but the market's trying to price that in. And this is what's been the problem. Every time the market has done a hell of a job of pricing in a concern, there's been something else that the market needs to price in. Okay. And, that's where things can get tricky, right? First, let's say the Russia invading Ukraine, market needed to price that in, right? There's no signs of any peace, no signs of that war invasion coming to an end. But basically the market's priced the majority of that in and it moves on, right? But you see like everything else, then the Fed balance sheet, right? The Fed talking about not only aggressively raising rates, they're also looking to accelerate the process of running off the balance sheet. The market had to price that in, right? And it did. It priced that in. And then now I think the kicker here has been China, and that's a big one. And the market's in the process of pricing that in. And I think why we're seeing it in the overall indices, as far as the selling is concerned, and just broader selling in general, I think because this really, if you're looking to price China lockdown in, you're talking about an acceleration of a global slowdown, and that's everything across the board. You're going to get smoked out of every hole. There's nowhere to hide. Okay, so we're seeing that. The good thing, though, there's some good, believe it or not. The good thing is a lot of us really felt, because of the significant geopolitical events and just the Fed, how big of an event in itself. You're talking about massive easing into massive tightening, never been done before. It's just a big deal, okay? A lot of us felt like this correction, or maybe it ends up becoming a bear market, whatever it is, can't come to a close unless we see capitulation, right? And to get capitulation, you're not going to get capitulation when you have numerous places for players to park their money and hide, and not only hide, profit from, okay? And that's been the case throughout this correction. You could have gone into commodities, commodity stocks, gold, oil, numerous places. Okay, you could have rotated out of tech and cyclicals and gone into those areas, and you would have made money. Okay, not even preserving capital, you would have made money. Okay, the markets are, the corrections are, they just don't come to an end. Very rarely come to an end while that's going on. Okay, and you get the process drawn out. You get these massive rallies, you get these phases of sell-offs where the world feels like it's coming to an end. And all it is it's just a lot of time, and where the market usually trades in a range. Okay. So what I'm getting at is the good thing about now this China lockdown being priced in by the market, you're getting high correlation across all factors and sectors, right? Everything. So even the stuff, even the Apples of the world, even the energy stocks of the world, everything is going to see volatility at the least, if not selling. Okay. And that quickens the process, usually quickens the process. You get to where you want to get to a lot quicker. Why? Because that's where players are going to feel the most heat. That's where they're going to hedge up aggressively. That's where they're going to throw in the towel and give up on equities. Okay. When they have places to hide, it's just not going to happen, right? It's not going to happen. So inevitably that had to happen. We were talking about this on Sunday. I hate to use the term that it always has to happen, because it doesn't. I've seen bottoms where you didn't get capitulation. You didn't get that 100% correlation to the downside, okay? But every major bottom, right? Every major low where there was a major event, major selling, just felt like a legitimate correction. Every major correction ended with some form of capitulation, right? You had COVID, the COVID lows, you had late 2018, you had 2015, 2016 lows, 2011 lows, okay? Obviously, there were a lot of other minor bottoms or some selling that I didn't just mention that didn't have capitulation, right? So I hate to use the word you always have to see it, because you don't, but usually when it's a legitimate correction with some major news behind it, the market always finds a way to get everybody to throw in the towel before the process comes to an end. All right. And so we're seeing that. And now I think the good thing too, which is there's good and bad news, you're starting to see that in names that a lot of people have been hiding out for ages, right? A lot of the big tech names, even the semiconductors, right? They were down recently, but they're up so damn much over the past decade, and that I guess is the bad thing, because the selling there could be a lot more to go, right? A lot more pain at the least in a lot of these areas. All right, but the market itself, I think if we see some form of capitulation, whether they come into commodity names or the new regime names, as we like to call them, or God only knows what new names, what new sectors can arise. If we do see some signs of capitulation, I think we got a higher probability of this thing being over than we did before. Okay, so that's the good and the bad news here. The other form of bad news here is it's earnings season. Okay, and earnings season, we have no, as far as us in the steam room, utilizing the tools I'm talking about, sweeper activity flow, that sort of thing, there's no edge. There's no edge. Okay. And like today, for example, okay, there were periods where, the amount of ETF put activity was just insane. Okay. And it makes sense, right? Think about like usually every earnings season, these big tech names, we've seen the opposite. We've seen nothing but crazy call buying ahead of earnings, right? Because everybody was expecting good news. They were front running it. They were pricing it in. And we used to see the QQQs get lit up call side every earnings season with Apple and the rest of the boys, right? Now going into this quarter, right? And especially now with this added ingredient of the China lockdown accelerating the slowdown and the Netflix hiccup, now you had a crowded area, big picture wise, right? Investors that have been sitting in these names a long, long time that are concerned about this earnings season, right? Not only not looking at it as a catalyst, they're concerned about it. So in the short amount of time, what you see is what we saw yesterday and today, where you see these obscene dollar amounts behind these QQQ puts, right? Multi-million-dollar puts. And it doesn't, I know it sounds silly, but it doesn't tell us much about the future when we see that action. All it's telling us is that players own a lot of this stuff and they don't have enough protection. And they're scrambling for that protection now because they don't have enough time, right? I mean, today you had Google and Microsoft, you had no more time. So if you're going to put on protection, you had to do it right now. And that's why I think a lot of that ETF activity was crazy. So as much as it looks like these tech names are heavy and are heading lower, what I'm saying is the flow doesn't tell us anything about that. That has to do with just earnings and earnings itself. All right. So that's the problem with the time we're in right now, earnings season. The flow is borderline useless. Okay. If you see them coming in attacking ETF puts, you could get in the middle of that. Okay. If you see rapid fire QQQ puts in the middle of the afternoon, okay, you can look to scalp that momentum, right, and move a stop along the way or whatever the case. But, what I'm getting at is you're looking to take advantage of the momentum that's created off the buzz of that order flow. Okay, not that order flow being right. You understand? You're just looking for the momentum created off players reacting to that order flow. But that's the extent of it. All right. I wouldn't recommend you start swinging puts off earnings season put action. You're destined for a debacle doing that. All right. And the same thing goes for the call buy. Okay. And that's what's, I think, disappointing the most. You have stocks that are getting hit and you see a decent size call buyer come in and it's useless. It's useless. Okay. It's absolutely useless. So what you have to do, the prudent thing to do is if you are interested in the name, wait till they report earnings. Okay. And see if that flow comes back and they start accumulating that name. If that bet was real, right? If you saw some size and you got excited, a pre-earnings, if that player was a real buyer, they don't stop there. Okay, they're going to come back and add, especially if the stock's getting hit off earnings or the market, come that time. So look for tack on activity post earnings, and then you can start taking that action a lot more serious. But now is basically a sit on our hands, look to scalp type of moment if you're trading off the sweeper activity. Okay. Like I said, if you're doing other things, you can utilize the intraday sweeper activity almost like a momentum indicator and look to scalp intraday. And that can provide some sort of edge. Other than that, there's zero edge. Right. That's what I'm saying, Saeed. We're seeing today, we saw absurd amounts of, dollar amounts of put buying in ETFs. And that's all related to earnings season. And again, it may end up looking right because of how shitty the market looks. But the reason why we're seeing it now is because of earnings season. That's it. Okay. We have to, whether that statement is right or not, we have to automatically assume that. Why? Because we know earnings season, the probability that players are hedging and protecting positions, okay, the odds of that goes up drastically, significantly. So there's a much lower probability you're going to find clean directional betting during earnings season than you would post earnings. That's simple. Okay. And, you know, it's like everything else in this game, it's a numbers game. And we want to pick from the cleanest pile of flow, right? If that's what we're basing, you know, our stock picking process or whatever it may be. All right. So while that $6 million protective order in SPY may indeed be a directional bet on further downside, we have to assume it's earnings protection because that's the higher probability. There's higher odds of it being earnings protection, if that makes any sense. All right. And then, like I said, if you start to see that as earnings winds down and you continue to see that put action, it's going to be telling. But in no likelihood, you're not going to see it for that reason. All right. So the bad news is we can't really pay attention to the flow here as far as being actionable and in picking stocks and picking names. But that also may be a blessing in disguise because this market is a shit show. All right. And prior to this earnings season, the flow in a lot of areas has been a shit show. Okay. And ultimately, as discouraging as that may be and as disappointed as we get, because we're you know, jonesing for action, it protects us. It protects us from really getting destroyed here, you know, and getting destroyed. Because think about it, like, look what I'm doing, right? Off that Sharpie signal, right? I've started a SPY position, right? And been buying some SPY calls, right? And adding on the way down here, okay? Now, how much more pain would I be in right now if I, you know, just started picking my own stocks because I felt bullish, even though I wasn't seeing flow. And now I got a basket of, I don't know what names I would have bought. God only knows what I would have picked. You know, I'd be lit up right now. I'd be lit up right now. So ultimately what I'm getting is, as disappointing as we may feel at times that the flow is not really providing anything to us, it's when it's telling us to chill out and not do too much. Sometimes that's the most important thing it can provide, guidance there. All right. And it will change. We don't know as far as the timing is concerned, it will change. All right. So that's the good and bad there. I got a lot of good and bad for you guys today. The other good, what I feel is that, again, going back to the point that everything's coming in now, you got a lot of these commodity names that you guys have been interested in, right? Not even just miners, commodities, again, that new regime sector that we labeled it, they've been correcting as well, okay? And we needed that. Okay, right? We were talking on the last few webinars here that, you know, I mean, you can't buy Alcoa, okay, up in this neck of the woods here for, you know, for a swing position, for a swing trade. Why? Because you may be high, you know, you may be up over the short term. But again, here I go with the odds and probability. The odds are something like this is going to show up before we sell it for a profit because of how much it's moved already. Exactly. Nothing goes up forever. All right. So if you are bulling these names, right, and you think that tech is dead, listen, you got all the ammo right now, right? If you're one of those believers that tech is going to be out of favor for quite a while, and these things are the new leaders, for the foreseeable future. Okay. This is exactly what you've been waiting for now. All right. We already saw one big order come in, right? Yesterday, was that yesterday? Yesterday. Wait, what's today? Tuesday. Yesterday. Okay. We saw a sweeper hit the name hard already. Okay. They waste no time when they're interested. And, you know, I can almost promise you if they like this thing, they're going to tattoo it. It's not going to be just that one order we saw yesterday. All right. So if you're interested, if you were interested in Alcoa and you didn't want to, you know, you did the smart thing and not chase sweeper number 800 into the highs, you got a nice healthy pullback here, post earnings. Okay. You don't have to, even if you're building, you don't have to jump in right now, you know, put on a starter position, see, you know, how the stock reacts with the market, right? Now that everything looks weak, maybe you see some more flow come in and that can guide you when to add. And, you know, all of a sudden you built the position in a name you were staring at for the past 5 months. He's up 20% on it already. Yeah, had a nice kick yesterday, Frank. But, you know, these names, guys, it very easily, and that's where my gut has been. Okay. And I'm a growth guy. I love growth stocks. Okay. I love growth stocks. Everything about, not even just making money with them. I love the process of tech growth. You know, I just love it. The stories behind it, that whole thing. But I'm also a realist, and what we've been seeing, right? The clues out of flow, the price action, the rotation, everything we've been seeing has all signs have led to that they're going to come back into these names. Okay, now I could be dead wrong. Something could change, right? And drastically, like the Fed maybe pivots. I don't know. This market, this world is crazy right now. So I could be dead wrong. That's why I don't trade on my gut. Okay. But everything we've seen up to this point, this is where all the real money has been in these names. Okay. They've let all those tech names die a slow death. They dribble down and they show zero interest in them. They play squeezes and weeklies, and that's the extent of it. Okay. These are the names they've been legging in with time and size. All right. So all the signs have been hinting that this is going to be the place to be. This is going to be the place to be. And this is going to be, you know, these are going to be the dips you want to look for entries. Oh, well, yeah, that's the wild card here. If the Fed breaks something, we get that liquidity event, then we're in, you know, listen, if we're in 2008 all over again, Cal, we got bigger fish to fry. I'm telling you, I've lived through it. I'm telling you right now, you know, I'm telling you right now, our stock accounts, right, and taking some losses, they're the least of our worries. They're the least of our worries if we're going now, this day and age, into a 2008 style event. All right, please don't get me bunkered up, please. You know what I mean? Yeah, that's end of the world. Okay, and you think I'm exaggerating? That's the end of the world situation with the craziness going on right now. You know, we could have something where there could be a liquidity issue, a credit issue, and then ultimately get the Fed to pivot. You know, something like that. But please don't scare me with 2008. Don't scare me like that. You know, I don't get scared too easily in this game. That would scare me. You know, that would scare me. But, you know, so, and I don't know if you're making that point, Cal. If we do end up in an event like that, okay, a major liquidity event like that, then all bets are off. I mean, everything is going to get annihilated. Okay, that's what I'm saying, guys. You know, every time we look at indicators and all sorts of things, we always compare it to 2008 because that was the worst case scenario. Nothing is going to work in 2008. Okay, nothing. So you got to understand that, nothing. And even betting the downside, I explained to you guys, the last thing I was interested in was shorting and buying puts, because the market was going down, looking to profit off that, when I was more concerned about my money being at that bank the next morning. You understand? The last thing I wanted to do was make more money in that account and worry about it being there. That was 2008. All bullshit aside. You know, that was 2008. Yeah, and Peter's right. A lot of what a lot of people have been doing, they take 2008 and throw it out of their models. You're right, because it screws things up. You're right. You know, there's no playbook for 2008. Nothing. You know, no playbook. And trust me, there will be signs. If we are heading down a path like that, it's going to look a lot worse than this. I promise you. This is nothing. This is nothing. Okay. This right now, honestly, underneath the hood, there's been quite a beating in stocks on the indice front, on the indice level. This is hardly even a correction. I'm being honest with you. It's you know what I mean? We've just entered a legitimate correction. Your grandpa, because he knows your grandpa. He's been through some tough times. He's not like your grandpa's been through some rough times. He's scarred. All right. So a couple more things I wanted to hit on before I forget, because when the markets get juicy like this, I have a tendency to ramble. Another good thing, okay, I think we are getting really close to this again. Okay, we are getting close to a setup like this. Okay, so what I mean by like this, where we're in this vicinity to play for a decent sized snapback rally. Okay, and I know a lot of you were interested in that because of the timing factor, right? You're looking to be nimble. You don't want to be underwater. You don't want to buy on the way down. You don't want to build a position. You kind of want to get in. If you're right, you see a squeeze over the short term, you get paid for it. If you're wrong, you get the hell out of the way. You know what I mean? We're getting really close to that, really close to that. And I'm talking about even if we don't get the capitulation that we want, okay? As a matter of fact, we may get that before we get capitulation and get screwed again. And just prolong this whole process, just like this, just like right here. Okay, we didn't get capitulation there. A little more, we would have had it, but then this came and then just wiped out all of it. All right, so we'll see some of the indicators tonight, what they look like, but we're really close. We're really close. All right, so what's that mean? What that means, honestly, I mean, you want to keep it as simple as possible in this game. That means, let's say we're there, right? Let's say we see tonight's update across the board, indicator wise, and it looks like, the majority of the stuff we wanted to get there is there, right? You look to buy some SPX, SPY, QQQ calls. You don't go out too far out, okay? Because you're not looking to build a position. You're looking for a snapback trade. Okay, so don't go too far out. And you want to be really conservative, put in what you're willing to, risk what you're willing to lose. Lose what you're willing to risk. Okay, you want to, size up a little bit more than that, then get in and try to maybe work out a situation where you take a 50% stop loss, if you get lucky enough to do that. It's not that easy with options. Okay, but you look to get in, look for the squeeze, you get the squeeze. You got to get lucky to catch a move like this, but it should be a pretty decent one when it comes. Okay, and honestly, we could be there. We'll see. Could be tomorrow's weakness is a place to dive in for a snapback rally, right? So this could even be a snapback rally, this thing, right? Like this was ridiculous. But this, something to that effect too. And you could get paid, okay? And what's the logic behind it? The logic behind it is, as ugly as all this shit looks, it looks ugly to everybody and their mother. And now they're not scared. They're going to try to make money on the short side, right? And when that gets to the point of an extreme, they're going to get run over. Okay, no change, big picture wise. The market could be in full-fledged bear market. The market could be in crash mode, but the market gods are not going to want to pay these jabronis down here, late to the party, that see everything that everybody else sees, right? So what do? They run them over, okay? Bing, bing, bing. These guys are dead now, and then the market could go back south if it wants. All right, so that's what I'm talking about. That's what I'm talking about. Because I know a lot of you were, and for good reason. I agree with you guys being interested in only that right now. Anyway, I think it makes a ton of sense. I mean, we're not seeing any legitimate action in names that we're interested in. You know, I mean, what are you gonna do? Load up on SPY every day? So I agree with that process. So we'll see where we're at today. One more note, and then we'll talk about some other stuff. On the Sharpie end, I mentioned members know. So, I mean, you guys on this webinar maybe aren't aware. For me to add to a SPY position, I'm not talking about what I just mentioned, a snapback squeeze play. I'm talking about for me to add additional size to a SPY position that I'm looking to hold, not trade, okay? I, at the least, will need to see Sharpies do their thing again, right? And honestly, if it happens into one of these type of squeezes, I probably will hold off. So, like, I'm going to want to see it like this Friday into blood, and then I'll consider adding additional overall market exposure that, like I said, I'm not trading. I'm just building and holding on to. Okay, without that, I'm just not interested in doing that. Okay, I'm more focused. I want to see I want flow in individual names. I want to start looking at names and building basket there if I'm bullish, right? So if I see the flow there, I can buy names and add risk. If I don't, like I told you guys earlier, I'm not just going to pick names out of my ass and start buying shit, right? So the flow is going to be my guide. You know, the flow is going to be my guide as to if I'm going to get aggressive, where to get aggressive. That's another thing. You know, I'm being dead straight with you guys. I know some of you out there, and I'm not talking bad about any of you guys, but I know especially on social media and all, you know, you guys know everything about everything, and you're the best stock pickers, the best market forecasters. I get it. But I'm being dead straight with you guys. I don't know where or what names I would buy here. Personally, I have no idea. No clue. Okay. I can make a bullish and bearish conviction, and with conviction, an argument behind both sides, growth, value, commodities. You know, I really have no clue. And to me, there's a lot that looks like absolute dog shit out there. Absolute dog shit. Right? As much as I want to be a bull, yeah, again, I'm a realist. A lot of shit looks like shit. No, it looks like shit. You know, so we haven't seen too many constructive signals, too many constructive signs yet. And usually they show up out of the flow. Usually that's where they first show up. Usually I'm coming on here and we'll begin the webinar and I'll start talking to you guys. Listen, guys, I know it's pretty bearish out there, but you know, this sweeper activity accumulating, legging into now NOW into weakness. You know, stock's not doing anything. I get it, but they're building a position 6 months, 9 months out. They hit it every time the stock ticks lower. You know, we haven't even, that doesn't happen, hasn't happened at all. Not even the start of it. Not even the start of it. So I'm hoping that changes, and that's what I'm most focused on. So the only way I would add to, on top of the SPY position that I'm building now, I pretty much well, I'm done with the initial SPY position. I got one leg to add, which I've been holding off on, because I just see no rush, to be quite honest. So I'm pretty much done with it, the initial SPY position. The only way I would add any real size to that is if Sharpies step on the gas. Yeah, you know what's funny, Hussein? Every time I say, all right, this can't be 2018, it starts to look like 2018 again, right? You notice that? Every time I try to scratch it out, it starts to resemble 2018 again. So this was very similar to 2018. So if this was 2018, what would happen is you'll see things unravel here, right? You'll see things unravel. Maybe you get a little pause here and then roll over, and that's it. You get capitulation, you get everything, because it's going to really feel bad once we bust through there. Okay. So that would be 2018. Another thing this resembles to me a little bit. I was looking at it yesterday. Again, just the price action we're talking about. 2015, 16. So this was 2015, 2016. You had this, then you had a really strong rally, right? Up into a niner, double niners. And then that rolled over, and everybody thought this was going to break. Everybody. God, I remember the bearishness going into this low here. Oh my God. Oh my God. There wasn't a bull to be found. And you see, yeah, that was Bazooka Joe. And you see how this played out, right? Yeah, like the chart never does it justice, but you had this little false little rally and then come back and test it again, and then boom. Most bearish I've seen since March 2020. Oh yeah. Besides COVID, I don't remember like what besides the COVID crash, we didn't have anything. What was bearish? I don't remember anything too bearish here, around that time frame. This is COVID. Late 2018, you got to go back to. You got to go back to this. So this is what Hussein's talking about. All right. In where we're probably here right now. And this is coming if it's late 2018, right? And that's basically 2018, very similar to now. You had bullish, like survey sentiment and stuff like that, light up bullish here. And people thought, the lows would hold here. They really did, because you had some sentiment. And then it blasted through, and then just everybody gave up. And you got capitulation, you got a spike in the put to call, you got everything there. All right. So yeah, the Bova Bull, I remember, listen, the Bova Bull bear indicator can sit in bullish territory for a bit. I remember that being on bull signal for a good month. I'm trying to think what year that was. That might have been 2016. And the market still was weakish, so, it wouldn't surprise me if it sat there for a bit. Frank, I think we need capitulation. Without capitulation, the problem is, I don't think we get out of this. I think we could get a bear market rally, okay, but we're going to have to do this all over again. You understand? And this can draw out for a while. Okay, here's one more thing, guys. I'm going to turn every single one of you into a bear right now, okay? Because anytime I feel bullish, this is like my gut check to all right, Jesus, calm down. All right, calm down. Every time I try to get gassed up on sentiment getting washed out and stuff like that, I hit up this symbol and I look at this stock, okay? And I say to myself, wait, I'm trying to find a major bottom in the stock market with GameStop. Okay, GameStop, the poster child, okay, of riffraff speculation. All right, still at $128. Okay. I don't. I'm going to turn myself into a perma bear. No. Yeah, AMC is getting beat up a little bit. Okay, so look, this thing. But AMC was like 100, and now you're talking about it's a $15 stock. Before you even blink, Cal, this thing is going to be $2. It won't take long. But this thing is still 100 and. I mean, the other day I looked at it, it was $150. $150? How? Okay, okay, unless there's some huge metamorphosis within the company, maybe they buy out, some other company and keep the name and something to that effect. Okay, if nothing like that happens, GameStop is likely going to zero. I mean, let's be honest. It's going to zero. No? Yeah, Jay. I'm not exaggerating. This thing, let me tell you this. It's going to $2. Okay? Because zero doesn't exist anymore. It's going to $2. What do you think? GameStop is going to trade at $300 a share forever and just based off nothing? The market doesn't work like that. The market doesn't work like that. You know what I mean? It can do it. It can trade to 300 based on euphoria and speculation and bullshit. Okay, but it can't stay there. Yeah, well, exactly. In the heat of speculation, it was going to 1,000. I mean, it went to 600 for Christ's sake. But what the point I'm making, okay, is that if you're talking about a bottom, right? If you're talking about a flush, a capitulation, right? So we're talking about people throwing in the towel, right? Who have speculated over the years of this bull market based off the Fed's pumping of money, okay, and them throwing in the towel. How can we make that argument with GameStop at $150? You can't, can you? You can't. I'm sorry, you can't. So what I'm saying, I guess the point I'm trying to make is that for us to get like a full-fledged flush and the start of a whole new bull market, so post 99, 2000, you had the NASDAQ bubble pop, and then you started a new bull market, years later, GameStop's got to go to $2, if not zero. Just like all the internet names and everything. Guys, there were internet names in the 90s that had a better argument of trading anywhere near this than this thing. This thing can't trade here. Now, maybe that's why, people are short. They're not going to pay shorts. It doesn't happen that easy. It happens all at once. Look at what are they doing here, this company? Like they were on the verge of going bankrupt, weren't they? As far as I remember. Anyway, all that aside, the stock is at 130. Like, I got to see 50, right? Yeah, in a dinosaur industry, I gotta see 50. I gotta see 50 for me to feel better. Now, maybe I'm making too big of a deal out of it. Maybe I don't need. Maybe you don't need to see it to get the full capitulation. It's just a tough pill for me to swallow. I'm not gonna lie, guys. That's like the SPAC names trading at what they were trading at. Okay, if all those SPAC names were still trading where they were at, okay, how could you make an argument that there's a flush in capitulation? It's the same thing. GameStop is the same shit. Yeah, those SPAC names. Remember all the jabronis on Twitter talking about how SPACs are the future. This is different. You're a boomer. You don't understand. You can't lose money in SPACs. They all got blown up. So it's the same. Honestly, I think it's the same argument here. It's the same argument. It doesn't have to go to zero right away, but it's got to start the process. I think AMC has started the process, but I guess it's from a lower level. It's $15 AMC. This is good riddance. Forget about this thing. Yeah, look at those names, guys, though. Look, okay? Look at these things. Look what they look like, okay? This is what they're supposed to look like. This is what they're supposed to look like. All right? So this would be like GameStop right now. This would be like Skills still at $40. I'd be like, oh, yeah. Wow, Skills. They're still, no revenue and they're still trading $50. Wow. But this is what it looks like. Like, these are done. Kaput. Christmas tree. This would be a Christmas tree, Cal. What's this? This is like an extension on there. These are crazy, though. These are crazy. So yeah, and guys, there's a lot of good too. A lot of this garbage is gone. It's going to be gone. The majority of them aren't coming back. Wish, all those names, they're gone. Okay, they're gone. There's going to be new, healthier names that people are going to start to get excited about. It's just it takes time, man. It takes time, and the big guys it's always the big guys and the indices. They're always the last to get hit. Always. You know what I mean? They're always the last to get hit. So you're probably, all this being said, I know what some of you are thinking. You're probably saying, why in the world would you even look to burn your money building a SPY position if you truly didn't feel that there was any capitulation for a bottom? Okay, and that's a great question if you're asking that. Okay, but my answer, and I'm being dead honest with you, is that based off sharp hedgers unwinding their short position, their hedge. Okay, there was no guarantee that capitulation would come at a lot lower levels. You understand? Capitulation could come anywhere. It doesn't necessarily mean it has to come at lower levels. You understand? We could have got capitulation today and above, the prior low. I didn't know how this would play out, the rest of the time. So what I figured was, based off Sharpies unwinding their hedge, their short position, right? That something like that, a trading range would play out. And then before we started a new leg higher, new bull market, whenever that would be, we would have to see capitulation. But we haven't seen it. And, maybe this could very well be the start of a bear market. I don't know. I don't know. Now, bear markets, this could be, you could have another rally here, right? And you're still in a bear market. you can literally rally all the way up to 470, right? And then, start another leg down and head lower. And that could all be the process of a bear market. Yeah, I think the thing with the Sharpie signal that screwed, I know a lot of us the most, was that it came into the rip. It came into the rip, But that said, I think now we got cleaner confirmation now. You understand? And I'll be honest with you, Hussein. Friday, I think, is one of the first tests. Like, if they were really bulled up, like if they saw a legitimate reason to take off their hedge and it wasn't just because of a squeeze, they would buy this. They would go all in here. Right? So I think we're going to get that answer this week. I think it's an important signal here. Important signal. Because usually the prior signals all have come into sell-offs. This one, they took off some hedges, they took off some hedges, they took off all their hedges. That's what happened there. Where usually is they take off some hedges, they take off some hedges, they get net long. So, well, we'll see. You know what I mean? We'll see. We'll see how it plays out. But that's the only way I'm going to add any exposure and, names too. Yeah, you got the Fed next week. You got the Fed. You got a lot of bulls in the air. You got this Russian invasion shit too. That's crazy. With what's going on there. You got so many different things going on. So many different things. Usually it's one major thing. Like it would be the Fed tightening, and it would lead to a correction. And, that would be the focal point. You understand? Now you got 4 or 5 different things going on at once. So like I said earlier, the market prices in something, and then a couple of days later, it's going to price in something else. It's going to price in something else. But Hussein, it's hard for me. I don't know. I'm not educated enough to understand exactly what's going on there. You know what I mean? I really, I have my feelings about the whole thing, but I'm sure there's smarter dudes in the Fed than myself who should know what the hell they're doing. Well, if that happens, you're talking, that's an exogenous event. That's a big deal. You know what I mean, Charles? Like the market didn't price that in. That's an outlier there. If that happened, you got major issues. But guys, listen, this is Taiwan, the invasion of Taiwan, China. This is the market. That's why there's no locks, there's no guarantees. You got to be able to accept losing money, losing a bet. There are things that can come out of anywhere, and alter the course of everything you're seeing right now. The good thing that I think the good thing here is that there's enough bearishness that if things do get dicey from here, I think we're not too far away from at least a solid intermediate term bottom. A solid intermediate term bottom. And honestly, that's what a lot of you guys are looking for, no? That's what a lot of you guys are looking for. We're going to be pretty close. I know it's hard to see right now. We're going to be pretty close. We're going to be pretty close after today. Yeah, market's down because of earnings, right? So you got lower prices already in ES. Google them. See, the other thing that whatchamacallit, that looks bearish to me is tech. You guys know, tech is so, these names have been bulletproof that they have to get hit, and they're getting hit. Is it enough though? Is it enough? But it can happen quick. How much is Google down right now? Oh, let's check the CDS. Good call. Let's check it out. Good call. Let's see credit default swaps, what they look like. Oh, it didn't update yet. It didn't update yet. 446 high yield CDS new highs. So yeah, there's probably a spike coming on that. Yep. So, you know, I don't know what, like, and with like people are calling, like the Fed, a lot of people are calling them for them to just raise 75 this next meeting, you know, front load it. Yeah, now you got this China lockdown situation. I don't know, you know what I mean? This is a dicey little situation going on here. Yeah, bullet. And Nomura pumped it, and they're pricing that in for the next meeting, Saeed, as crazy as that is. On, oh, the spreads, right? 490. And where are we now? You said 446. Wow. Wow. Yeah, I mean, honestly, that's, again, whether we could be in the start of a bear market, I have no way of knowing that, but I think we're not too far away, Moshe, of a tradable bottom. Okay, so I'm not just talking about a snapback rally for a couple of days. I'm talking about a floor where you're going to see participation from individual names too, you know, over a multi-week period. Kind of like what we got here. The rally was just so damn strong. It happened so quick, it felt like, right? But kind of like here. Yeah, like like even you want to talk about like 2008, like even in that debacle, before it got crashy at the end, you had several of those, you know, several of them. Like the market didn't just go straight down. Like, look. And again, the charts, you know, a lot of times they don't do it justice, the charts. They look like, oh yeah, that's not too bad. That doesn't feel too bad. But when you're sitting through it, it feels worse. Like, look at this, okay? This is the 2007 high, okay? So you had this low, right? Then you had a little minor rally here for a lift for a month, right? Then this, okay? And this is kind of what I'm talking about here, right? So we're close to something like this, right? Or you could even make the argument here, right? Whatever, but close to something like this to where you get this at the least. You understand? And right, that doesn't look like much on the chart. Okay, it doesn't look like much, but there's money to be made in this. Okay, not only just the indices, you got to see like some of the individual names, the movement there, because they've been hammered. You know, so you're talking about a good, let's call it 2-month rally, if you count it from here, 3-month rally. Okay, then you go right and you break lows again. Then you get another one of these bear market bottom rallies right here. Okay, and then this is where Shit got crazy. This was where I was in my bunker hanging out. Right here. This was a blur to me. This whole period. So market started crashing like this, right? And right about this time here, this is me. I started running away into my bunker and getting set up for Armageddon. Probably around this period of time here. That's when I knew shit, there was, the end was near. The end was near. So this all here was a complete blur. I don't even remember it. Dead straight with you guys. I don't even remember what happened. I don't even remember it. So, you know, again, point being, outside of this, you get, you know, when things get too bearish, you get these tradable floors. Yeah, I wasn't even betting ponies. I really thought the end of the world was coming, Joe. You know, I knew people who were buying gold bars, for Christ's sake. Gold bars. I'm like, what? Guys, I said, what are you going to do? What are you doing with gold bars? What are you going to do with fucking gold bars? Oh, well, you're going to have something to buy shit and trade with when shit goes boom. Well, shit goes boom. What the hell are you talking about? You know, like people, I'm telling you, people in the finance world, it was spooky shit. No doubt, even including myself, pulling cash out of bank accounts. That was a given. But people, gold bars, I remember, oh, those gold coins and bars were hot, boy, back then. Yeah, I mean, Moshe, we're spoiled over here. And then the other country, you know what I mean? And then the other country, forget it. It feels like our depression all year round. Right? Here we get slower retail sales and people are running around like chickens without a head. You know, home prices go down for a month and people are like, oh, Katie, bar the door. It's over. So you got a lot of spoiled human beings in this country, including myself. All right, so that's where I think. Oh, one more thing. We don't have to. I don't have to occupy all your time today. Another thing that we've been talking about that's starting to come about here. Hold on, where did I post it? I'll show you guys. Hold on. Oh, I can't do an emoji on here. Maybe I have it on. Oh, I think I have it on my. Hold on. Okay. Remember, the other thing that was a problem, all right, that, in other words, we'll have bear market rallies and squeezes, but for the low to be in, the fund flows. You know what I mean? You still had money coming into flows every week, into funds, every week, into equity funds. Okay? I told you guys back in 2018, there wasn't any, there were outflows every week. That's how rare inflows were. Here was the total opposite. Here's a chart that'll show it better. Hold on. So the blue, this is global, so it doesn't really drive my point home, but okay, the blue line here. All right, so you see the amount of money. Oh no, this dark blue line, my bad. This dark blue line. Okay, you see the amount of money that's come in, right? Look back here, look. You think I was lying to you? Look at this. Okay, look at that. Throughout that whole rally, okay? So we didn't even see money start to come out yet. Highly unlikely that you're going to find, quote unquote, the bottom, you know, the end of a correction. They got to get shaken out. And right now they're being there was, I think, back-to-back weeks of outflows. Now, that's good and bad. The good thing is it started. The bad thing is that usually weighs on price action. You understand? It usually is bearish while it happens over the short term. So that's the other good and bad I wanted to tell you guys about. But we're finally getting that. We're finally getting that. There's another chart that looks, I think I put it on my on private Twitter. I don't know how to search it though. I think I put the emoji. I can't do an emoji from here. Hold on. No. Anyway, let me see, maybe a, hold on. It really shows it perfect too. Yeah, this shows it, I guess. But this is not the chart I was looking for. But you see? Look at this. Okay. And this is what was normal prior to that. Right. So I'll give you an example. Let's see. Where was, it's not on here. I wanted to go back to late 2018 on here. Here's the COVID lows as an example. Okay. Right here. That's the COVID bottom. A month, 6 weeks into the COVID lows. All right. So, you got to see something to that effect here for a correction to run its course. That's the job of a correction. That's why we have corrections. Here's weekly equity fund flow. See the 2 weeks here? So you got some money starting to come out, but nothing major. I was looking for another chart. I can't find it. Yeah, COVID was a crash. I'm saying that happened a lot quicker, the process. You understand? And you still had it. That was a big bang, so it spooked people out. This has been more drawn out. So, at the end is where you get it. You're going to start to see it. So in late 2018, I guarantee you, we had the similar outflows. Oh, well, you're talking about a crash. Well, if you're looking for a crash, Jay, then yeah, well, then we're nowhere near a crash. If you're looking for a crash, you know what I mean? Like you're talking about COVID was the definition of an exogenous event. You had a pandemic, you had a health crisis that the market and players never seen before. The end of the world was coming. You understand? You were locking down countries. Like, think about that for a second. You were literally, for the first time ever, shutting down countries. So you're comparing apples and oranges, in my opinion, This is more, like Hussein was saying, this is more late 2018, 2015, 2016. To this point, that's what this is. This is not, off an event like that. 2013, that's when we started the taper, isn't it, Saeed? If I remember correctly, I think that's when we started tapering back then too. So, COVID was a crash because you had an outside event. You had something happen out of the blue and catch everybody off guard, created the selling. This is more of, the process of a correction. But this is a correction. And again, we just now are entering the definition of a correction. Under the hood, growth stocks, all the crap. Yeah, you've had bear market without a doubt. But I'm talking about on the index level, this is nothing. This is nothing. This is healthy correction. The note from DB. What are they? They're calling for the end of the world, right, Nina? Oy vey. But you got a lot of, and this usually is a good thing, guys. You got a lot of bearishness stemming up there, out there, So one or two things. You either need a 2008 style situation to really get things going to the downside, or you're closer to the end than the beginning. Because right now it's as bad. Can the news get worse? Of course it can, but it's pretty negged out there. I think you're capitulation away from doing everything you needed to do, but pretty negged out. Like I said, there could be a bear market in the works, but I think that you have a lot of bearishness to work off. You're closer. In other words, now with the amount of bearishness out there, okay, you're closer from this bearish cycle being over than at the start. You understand? Even if the market has, even if the S&P has S&P 1000 destined on the horizon, you got to wear out a lot of these bears. You got to wear out a lot of these bears. You got to wear out a lot of these bears. Like I showed you in 2008, guys. You saw the chart. I'm not making shit up. You saw it. Like that was the end times. That was the worst that any player in market history has been through. Okay, so it's a pretty good example. You saw how it played out. Every time the bottom fell out and it looked like game over, you had a floor and multi-month uptrend. And like I said, don't even let the chart of the S&P 500 misguide you, because individual names, you had to see some of the squeezes in names that were heavily shorted. You had stocks doubling in a couple of weeks into that rally. You know what I mean? Like you had stocks that were down from 40 down to, let's say, 8. And in 2-3 weeks, they were at 20. Right? So there's a lot of money to be made in that window. You don't need the start of a new parabolic move to new height. That's why I think the last few years, not even spoiled. They gave a lot of players the wrong view on markets. This is not normal. The market was rigged. Okay, the market doesn't do this all the time. You see this? Okay, this doesn't always happen. This is a rigged market. Rigged. You understand? Usually, you're trading in ranges, and the up moves, you can make a lot of money. Net, you high lows, right? When you go on the weekly, monthly charts. But there are periods of time where after big moves, you do this. Okay? Look at this. Now, you know how many people were betting on 2000 because of what happened in 2008? Everybody was either thinking new bull market or crash. Okay? And what did we do this whole time? Look at this. Okay? So from August of 2015 for a full year, and I could probably even go further. Okay. Almost 2 years. Look at this range. You see what I'm saying? You know how many people thought the bottom was going to fall out here? The bottom was going to fall out here. You know how many people thought the market was going to go parabolic here? Market was going to go parabolic here, right? And instead, what did it do? You could even do this. Look at this. Okay, from here you could do it. Look. Look at this. That's a lot of net nothing, right? Do you guys see what I'm talking about though? Okay. What happens if you didn't rein in your enthusiasm and bias then, especially at the wrong spots? Yeah, but you know, I mean, when you that was coming off this, you know what I mean? That was coming off the Fed rigging the game from 2009, and look at the move. Look at this. Okay, look at this move, just like we had the last few years, right? The Fed rigged the game. You have a psychotic move. Okay, when it finally comes to an end, people think game over, right? People think 2008's coming back again. And ultimately, it was just a lot of mess, right? Felt crashy at times, felt euphoric at times. And you had to find a way to make money in between. So that's all I'm saying. What I'm saying is, based on what we're seeing, we're closer. My point I was making before is we're closer to one of these lows than we are to a high. You understand? That's the point I'm making. Oh my God, 2015 was scary, Eric, right? That, you know what? Remember Deutsche Bank was going to go under. It was the next Lehman. Remember that? 2015 was no joke. It probably is. You're right. Yeah, you're right. You're right. This, again, coming off the rally, Eric, I can understand, why it feels worse to some people. And that's what scares me in some of the bigger names, because they really didn't even get hit that hard. But this is on the index level. This is cupcake city right now. This is nothing yet. This is nothing yet. This is nothing yet. And guys, you got to be willing to lose some money if you're going to try to make money in these type of markets. This is not a market that just goes straight up and you get away with all your mistakes. You gotta have losers. You're gonna have losers. It's part of the game. You're gonna learn that now. Whether you like it or not, you're gonna learn that now. If you try to avoid losing completely, you can't play this game right now. Wait till the Fed rigs it again. And they probably will, no, Cal? And they probably will. Yeah, and that's there's nothing wrong with sitting back, chilling out right now. You know what I mean? There's nothing wrong with it. Just be ready. Be ready. When the tide turns, that's where you got to try to make some money. Yeah, they're gonna rig it, Cal. They're not. Once you put the hand in the cookie jar, Cal, you can't. Snoring, she snorts. Yeah, this Deutsche Bank, every time I look at the stock, it looks bad. But it it looked worse. Where was it in 2015? Look at this. Wait, it went lower? I think it went lower than yeah, it must have. Hold on. Look at this. Okay. Look at this. Okay. This is what we were talking. This is what Eric and I are talking about. Look at this. People thought they were kaput. Done. Yeah, that's what I'm saying, Frank. They thought they were the next Lehman, remember? That was this drop here. It felt like the next Lehman was coming. I remember the flow, okay? And it was just like back in 2008. The stock was trading 25, 30. They were buying the $5 puts, remember? Yeah, it's crazy. Crazy. So that's what a lot of you youngsters don't even like. You guys don't understand when we get when it comes time, and maybe this is it down the line, okay? But when it comes time to where the music really stops, you watch what happens. You're gonna see Robinhood, those joints go up in flames. You have no idea. You have no idea. Yeah, Eric, this has been a different animal. I agree with that. Where you had so many stocks under the hood get demolished. I mean, full-fledged bear market, and not even the indices correct. They just rallied to new highs like nothing happened. But you see how they did it. They crowded names like Google and Chipotle and Costco, right? I mean, they just crowded those names. Like, look at those stocks, what they did to them. These stocks were, you talk about parabolic moves. Look at this. All right? Look at this. It's like a blow off top. Yeah, a lot of crazy names. So, but just as many as stocks that look like this, you have a lot of stocks that have been destroyed. Destroyed. It's definitely it was a rigged game, guys. That's why it's weird shit. The game was rigged. You know what I mean? The Fed was giving out money to put into stocks. Okay. Retail was at home, locked in the house, and the Fed sent them a check to deposit into Robinhood and to buy skills. Powell said, here's $5,000. Go buy some skills calls, yo. Right? That's what happened. Commodity stonks. All right, guys. I'm going to wrap it up. All right. It's ugly. It's ugly. But let's see how it plays out. Okay, let's see how it plays out. I don't think we're too far away from at least a little bit of action to play as far as squeeze little bottom. All right. Maybe we get capitulation, right? So those of you rooting at home, capitulation, right? Look how close we are. You see this? These are the put the calls. Okay. Simple put the call volume ratios. All right. Here is, let's go by this one. We'll go by these here. Look, right? Late 2018, COVID. Okay. The last two examples, just to give you an idea. Okay. You see how they stick out like a sore thumb? This is the NASDAQ up here. Put the call up here. All right. But you see how they stick out like a sore thumb? Okay. That's what we want here. Today, the put the call ratios were down. All right. That's not what we want. Okay. We want to see bink. Bink, bink. Yeah, of course, Frank, every night. Oh, what happened to my charts? Right? So we're there. Now, the worst thing that could happen for us, and this is what happened the last few times, we get a squeeze. For whatever reason, we squeeze without this happening. And the odds, again, I'm talking odds, the odds are that it's just a squeeze, that we didn't do what we needed to do. You understand? All right. And like, for example, late 2018, which is back here, okay, you had some rises in the put to call before that spike, but it never got there. And, you know, a lot of times you thought the market bottomed. You remember what that late 2018 chart looked like. But ultimately, at the end, it showed up, you know, before it was over. So that's kind of, you know, this is one of the few things that will signal capitulation, what we're looking for. Okay, that's players saying, I had enough. They smoked me out of my hole. I'm done. That usually comes at the end. Okay. Again, at the end, you know, for at least an intermediate term low, a significant bottom that we can benefit off of. Okay. We don't have to look to sell 2 days later, that even your positions you'll get paid on. Right. The atmosphere, the climate for a multi-week period, usually multi-month period, becomes a lot more favorable. You know, you start to see uptrends again. You start to see bullish call activity again. You know, you see a lot of constructive signs. So that's what it usually leads to. Okay, so I think that's what we should be focusing on right now instead of anything else beyond that, because I think the further you go beyond that, the more difficult it gets. You know, so that and just the call activity in individual names. Let these son of a bastards buy something, you know? Start buying shit, for Christ's sake. And that's what we want to start to see post earnings. Anybody have any last questions or anything they're curious about? Anything like that? Before we wrap it up? VIX, you know, that too, right? VIX, you know, you need that elevated. So it's a good sign that we're seeing VIX participate here. All right, because prior to that, it really wasn't. You know, so this is very similar to 2018. Again, very similar. You have very similar. It was in a range, and then the last round, you had bink, it broke highs, and that was it. And that was it. You know, so this is a good sign. Maybe, you know, the last few days, maybe the next couple of days, obviously it's bearish, right? More volatility, crazy moves, more selling, but ultimately, this is what shows up at the end. This doesn't, you know, this does. Before things, this type of cycle's over. All right, so this is good that it's participating. Check, that's good. Yeah, it is the top of a range. That's what I'm saying. So like, if I remember correctly, quickly, late 2018, all right, I'll give you an example. Late 2018. Is this? Yeah, this is it. Okay, so here, look. Okay, so this is what the VIX looked like late 2018. Here's October. Here's your range. Okay. Now I'm gonna move the chart day by day to show you how it played out. Where's the look, top of the range, bink, bink. Good night, Irene. See that? Let's rewind. Instant replay. Okay, VIX down here, no good. Right? Correction can't come to an end like that. Oh, here comes VIX. Oh no. Volatility. Market's crashing. Oh boy, we broke out. And good night. Yeah, that's what it does at the end, Paul. It gets everybody all riled up and then unwinds. And Paul, that's what creates the rally. The unwind of that VIX is what assists in the momentum of the up move. Yeah, exactly. Rocket fuel. Exactly. Exactly. So this is what it looked like. So you guys know, very similar, right? Very similar. Very similar. But you see here, while the market was still shaky, okay, VIX wasn't doing much. But then once VIX started cooperating, that was the final flush. So that's what you kind of want to see here, right? You know, that's what you want to see here. Sharpie VIX, that was another little weird thing. They added some VIX long exposure right around when they took the hedges off. But no extreme there. No extreme there. Fed, yeah, usually that's the case, right? Post-Fed, they unwind shit, right? You got the buyback window opening. That's another form of ammo coming into play. So this is good that it's happening here right now. This is the window for all this to happen, you know, and let's hope they can get that final shakeout to get that case closed type of event, you know. All right, so that's what we're looking at here. That's what we're looking at here. Fed has never raised. Yeah, I know. I saw that the last Fed meeting. The last Fed meeting that I saw that stat. All right, boys and girls, always a pleasure. All right, we got a couple things to keep an eye on. Let's see how things shake out. Put the blinkers on, check your bias, put it into the drawer, and you know, we'll see how things shake out over here. That's all. Enjoy the night, stay safe, and remember, it's only money. It's only money. That's all it is. It's not that important. Yep. Go Jays, you son of a bitch. Have a good night, everybody. I'll see you guys, see most of you mañana.